630 K-How.
Once upon a midnight dreary, while I pondered weak and weary over many a quaint and curious volume of forgotten lore, while I nodded, nearly napping, suddenly there came a tapping, as of someone gently rapping at my chamber door. "'Tis some visitor," I muttered, tapping at my chamber door. Only this, and nothing more. Ah, distinctly I remember. It was in the bleak December.
I could listen to James Earl Jones all day. We'll have to see who's better, James Earl Jones or Bart Simpson. But we'll try Bart out a little bit later. Producer Shannon playing James Earl Jones, reading The Raven by Edgar Allan Poe. One of the few poems that probably almost every American has actually heard of. The 176th anniversary of its publication, originally in the New York Evening Mirror, 176 years ago today. The other story that I think most kids know is the Telltale Heart, right? That's an awesome one. I read that as a little kid, and I can still kind of picture it. It's so good.
But no football team was named after that.
Right. All right, it's Friday. I'm in a T-shirt today, usually in a collared shirt, but it's Friday. I'm in a T-shirt today, and just looking. We have so much to talk about. Obviously, we got all this kind of GameStop and stuff going on. There's so many angles to the story that it's actually a little bit difficult to talk about without getting sidetracked and going off on this or that tangent. But I'll do my best. And, well, I sort of go off on lots of tangents all the time anyway, so you're probably used to that. Before we talk about GameStop, I want to just tell you how crazy the market is right now and how we should all be really careful when certain kinds of things are happening. Now, if you've got young kids, you may have heard about this internet meme. And if you don't know what a meme is, well, then, you're probably older than I am and don't have young kids. But an internet meme called either Doge or Dog, depending on who was pronouncing it. And it was a Shiba Inu dog. And the dog's kind of giving you a funny, slightly side-eye look. And then there would be a bunch of different words around the dog as printed in text, like, "What are you doing?" or "concern," just kind of random weird stuff. So anyway, this was this meme that was going around. One of my kids got a smartphone case for his phone with this dog on it and that text on it. It's just a kind of a silly thing. So now we've all heard about cryptocurrencies. Bitcoin is the most famous one, right? And in 2013, when this dog or Doge or Doge meme came out, as a joke to kind of make fun of these odd trends in society, like that meme and like cryptocurrencies when they were just beginning to be understood, somebody created a cryptocurrency called Dogecoin or Dogecoin, depending on how you want to pronounce it. Dogecoin, and they created it as a joke. All right? As a joke. Now, it is a real blockchain cryptocurrency. Unlike Bitcoin, there is no limit on the supply of this potential cryptocurrency, so they can keep making more and more and more of them forever. And it was created as a joke, although some people have still traded this thing. Now, 5 days ago, this thing was trading 0.7 cents for one. Okay, so if you were writing it in dollars, 0.007, under a penny. And this morning, it's trading at 6.5 cents. Now, just think about that in percentage terms. This thing has basically gone up 900%. It's worth 9 times more. So if it's weird to think about it in pennies, think about a stock that has gone from $7 a share to $65 a share in 2 days on no news of any kind. And there can't be news because it's just a mathematical formula. It's not a company. They don't produce anything. It's just a cryptocurrency that can be created over time in unlimited quantities, so it's not even limited. If this isn't a perfect example of market insanity, I don't know what is. This thing was literally created as a joke, and people are buying it. This morning, GameStop is up a bunch. It closed under $200 last night, but it's trading around $340 this morning. It was a little higher than that earlier. All of this stuff is out of control. So let me just, listeners have asked, and by the way, if you want to send me any questions, text me at 57739, and I'll try to get to as many questions as I can over the course of the show. Listeners have asked, is it too late to get in on all this kind of trade? And look, it depends what you're doing. It depends what you're doing. If you're a pure gambler and you are making a trade, buying something at a stupid price because you think somebody else will pay a stupider price, I mean, that's a legitimate strategy. It's a risky strategy, but it's a strategy. As long as you know that's what you're doing, go for it. But please don't think that by buying GameStop at $340 a share that you're getting some kind of value. Right? GameStop will never be worth this price. It never was worth this price, even when its business was good. And its business is not good now, and it will never be worth this price. And at some point, the stock price will reflect what the company is worth. But as Lord Keynes said, the market can stay irrational longer than you can stay solvent. So I have no idea when any of these things are going to come crashing down to earth, and I have no idea how much higher they might go in the meantime. Tesla is another example, except, Tesla's a real company, and they just had their first profitable quarter, and you see their cars everywhere, and they make a very good product. And, as a company, I like Tesla. Is the company worth $900 billion or whatever it's trading for right now? No, but that doesn't mean, in my opinion, no. You might think it's yes. I think the stock is substantially overvalued, and I also think it's probably going higher first. And I'm not going to jump in front of that train. A listener asked if I got my order back in on GameStop yesterday. I didn't. I'll probably throw in a small order to short some today, but I'm going to make sure to do it in a quantity that if this thing goes up a lot more in price, that they can't squeeze me out, right? I mean, if I short this stock, I don't know, if it gets back into 400 area, I want to make sure that if it goes to 500 or 600 or 700, that I just stick with it, that the position isn't big enough that I get forced out. So it's going to mean a very small trade. On the other hand, you don't need to trade a lot if you think you're going to make $300 a share. And I do think that if I short GameStop at, $350, I do think I'll make $300 a share. I just don't know how long it'll take. I mean, this is some of the dumbest stuff I've ever seen. The fact that GameStop stock is higher doesn't mean anything for GameStop itself, except, now this is a key to think about, except if somehow GameStop could go sell stock itself at a price somewhere around here or anywhere, any decent price, and use that money to change their business and get into an entirely new business. Maybe that would put them on a track to be worth something someday. But here's one interesting way to think about it. Let's say that GameStop announced that they were going to sell $500 million worth of stock to raise money for the company. At what price do you think they could place that? At what price do you think they could sell $500 million worth of stock? Now, to be sure, with the stock trading 340, you only need to trade 1 million shares. You got $340 million of stock traded. But when a company announces that they're going to sell stock, normally that's a message to people that the company believes that the stock is at least fairly priced, if not overpriced. And I would think that if GameStop announced a secondary, I would think the stock would drop massively, like maybe to below 100 real fast. Who knows? This is the thing. I don't know any better than you know. I just know that a lot of people are going to get into this game late, and they are going to get crushed. And there are people who are buying these stocks now, like there are people who bought AMC movie theaters 2 days ago at $20 a share, and it closed yesterday around 9, I think, and it's 12 now. So you lost 50% of your money in a day. That's going to happen in all of these things. I just don't know when. And if you want to mess around with them, one side or the other, all I want to tell you is just remember that especially if you're taking the long side in a company that has no actual news, then what you're doing is pure wild speculation, hoping that the momentum keeps going your way. And again, that can be a legit strategy if you want to play that. There are people who make lots of money as momentum traders. It's different from trading on fundamental value, but just because it's different doesn't mean it's wrong. Any kind of strategy that doesn't involve outright fraud and manipulation is fine if it works. And that's one of the beautiful things about markets is people figuring out strategies that work, and sometimes people figuring out strategies that blow up the big guys. I mean, if you can take on a big guy and force a big guy out of a position, and you get on the other side of the big guy and you force him to have to chase and cover, you can make huge money like all of these people did. So I got no value judgment like someone's good or someone's bad or something's right or something's wrong. It's just all trading. My personal opinion is that almost every single stock that is run up on all this stuff you have a much higher probability of winning if you short it than if you buy it, but you'd have to be prepared to take significant interim losses because there is simply no way to predict how high it could go before it goes back down. That's my mindset. You should make up your own mind. I'm not telling you how to trade. Now, let me talk about another aspect of this. A lot of folks are, okay, so yesterday, Robinhood, this platform that's supposed to be trading for everybody and zero fees, and it looks kind of like a video game, and it's actually, a way for a lot of especially younger investors who maybe only have a small amount of money to put into account. Geez, maybe they're not even old enough to gamble in Las Vegas. Really. And they want to gamble, so they go do this. Robinhood yesterday, for a little while, put in some restrictions on a bunch of stocks, and I want to make sure everyone knows what the restriction was, because I think they're being described wrong. The restriction was you could only buy the stocks to close, meaning you could only buy the stock if you had a short position, so that buying the stock in would close out and reduce or end your existing position. You couldn't buy a stock to create a new position. So we talked yesterday about shorting stock. I'm not going to go through all that again. You were only allowed to, for a while yesterday on Robinhood, you could only buy if you were closing a short position. They are removing those restrictions this morning. I think they'll probably still put some kind of limits on how much people can buy, but they are removing those restrictions, which is part of the reason that these stocks have run up. A lot of people are talking about that restriction and some other things that some other firms did to restrict the ability of customers, that brokerage firms did, to restrict the ability of customers to buy GameStop and some of these other things. Everybody on the left, on the right, AOC, Lauren Boebert, are talking about this as some kind of collusion and market manipulation by the big guys to try to prevent little people from making money. And I want to tell you, I do not think that's what's happening. For one thing, people talk about hedge funds as if they're this, group of people who all collaborate and collude and do things to, get it over on the little guy. It is not how hedge funds work. Yeah, some of the biggest hedgies, I'm sure they know each other, but hedge funds collude and cooperate with each other as much as the Denver Broncos collude and cooperate with the Raiders. Right? You're in the same business, but they're not your friends, they're your competition. And they really don't work hand in hand. And the idea of lots of hedge funds going to the government and saying, you got to protect hedge funds, that is not how this works. Absolutely not. And I think that to the extent these brokerage firms did anything to kind of slow down the trading a little bit, they're trying to protect themselves and they're trying to protect their customers. They're definitely not trying to protect hedge funds. We'll be right back.
If you missed it earlier, we have your chance to win $1,000.